Welcome back, guys. In this video, we're going to start to discuss some real estate strategies. I'm going to break it over a few videos so that it's easier to digest. But I want to start out with one really important point. There is a difference between real estate as an investment and real estate as a business. Okay? They work differently. They involve different capital and time requirements. They're actually looked at differently by the IRS. And so it's really important to understand the difference. Okay? Real estate as an investment is there to generate long-term appreciation and for cash flow. Okay, that's essentially it. Now, it is in some ways a little mini business that you are kind of managing, but really it's considered an investment. Okay, so cash flow, long-term appreciation of real estate, that is real estate investment. Real estate as a business, there are a lot of people out there, a lot of different real estate gurus that talk about different methods to make money in real estate. A lot of those are actually real estate as a business. So one of the most popular, which is fix and flip, right? HGTV made this made this popular through all their different TV shows. Fix and flip, flipping homes is a real estate business. It is not a real estate investment. Okay? It's important to know. It is actually you're turning a profit. Right? You're buying something at a low value, you're hoping to increase value, and then you are selling it, what you hope to be a higher value, just to turn out a quick profit. It's not an investment, it is a business, okay? So we're gonna talk about some of those in this video, and then maybe break it out over a few videos to make sure that the content is easy to consume here. So let's look at the most basic real estate strategy, which is buy and hold, okay? The purpose of buying and holding real estate is for cash flow and long-term appreciation. That's it. Okay. That is the purpose. So there are a lot of ways to approach this, right? There could be low or high capital commitments, low and high time commitment, just depending on how you structure it. You know, it could be more passive or less passive, right? There's also there's a whole new aspect to real estate, which is short-term rentals, right? Before it was all long-term leases, you know, a year lease, long-term tenants, and that came with its own set of challenges. Now, where we have short-term rentals, basically charging nightly rates through Airbnb and VRBO and platforms like that, you can actually create a rental property that runs really differently than a long-term rental might. And so that, again, those come with different time and capital commitments. For buy and hold, you might go and put down 20% to get a mortgage. That might be your capital commitment, but you also could occupy the home for a year and then move out and use it as an investment property, putting down 3% as a down payment, for example. On the time side, you could manage it yourself, find tenants, do all repairs, all maintenance, all upkeep, check-ins, all that stuff. That would be a very high time commitment. With short-term rentals, same thing. If you are the host and you are the one meeting people to give them the key or making sure the amenities are all set for the next little group of renters that comes in, then that's a lot of work. That's a high time commitment. All of that is totally fine. It's totally fine. There's a lot of people that do extremely well being very active in that side of the business. Totally okay. But you have to understand it comes with a higher time commitment, okay? And then the reverse, obviously, the other side of the spectrum is you can delegate all that out, right? You can outsource that to property managers, long-term or short-term rentals, and really get a lot of that off your plate so you're not thinking about it and really make it truly passive. So that's buy and hold for the most part, okay? Another really common strategy, so buy and hold is real estate as an investment, okay? You're looking for passive income and maybe some long-term appreciation. It's an investment. One of the most popular business type of real estate businesses is fix and flip or flipping homes, okay? Became really big after the housing crisis. A lot of homes went into foreclosure. A lot of homes were short sell, homes, right? They did short sales on them. And so there were just a ton of homes, a lot of inventory, not enough people to have them. The economy was terrible. So people that had dry powder, had cash, moved in and started doing this, fix and flip, fix and flip, fix and flip. So the purpose of this is you're buying something at a lower price and you want to sell it at a higher price, okay? You just want to generate a profit. It's simple arbitrage. Sometimes that might include actually doing substantial work to it. Sometimes it doesn't, just depending on your model, right? But usually, because it is a business, it requires a high time commitment and it usually requires a high capital commitment. The reason being, when you are looking to purchase a home and other investors are looking to purchase a home, it's all about speed and you don't want to lock up your capital for too long, right? So you might be using your own money, but you're probably going to be purchasing homes in cash the majority of the time. You don't have time to get an appraisal and an inspection. You don't have time to get qualified for a loan, right? Cash offers beat out almost all of their offers. And so as running a business, you don't want to keep capital tied up in a property too long because then you can't go do another property and keep that money moving. And so usually it's a high capital commitment. It could be your own money, or you might go get hard money loans or a partner with other investors that have capital. We can talk about financing options in a future video. But generally, it's a higher capital commitment and certainly a higher time commitment. Just like any business, it is difficult to start a business and then work yourself out of all of the day-to-day operations. It's not impossible. People do it all the time, but it is a difficult process. And so you can get there eventually, but it's going to take some time. It's going to take a lot of work. So usually a very high time commitment at the beginning. So really this could be down in the entrepreneurship, business ownership space as a possible business that you can start. But I wanted to put it in here so you can understand differences between a real estate business and a real estate investment. Okay. So fix and flip, it's all about speed. And like I said, there's a number of different strategies here, but they all require a significant amount of work, okay, to find a property that's undervalued and then to actually purchase that property, then do the work necessary to make it appealing and sellable, marketable, and then to actually pull off the sale and make money on it is difficult. Again, it happens. People do it all the time, but there's also a lot of other people that don't. They don't make it happen. It doesn't work for them and so forth. And so it's just important to know that this is a large commitment, okay? So what I want to help you understand, this is a commitment. It's not just passive mailbox money. You hear all the gurus talking about. There's a significant amount of work that goes into this, okay? It can be totally worth it and you can build a great business. So some of the strategies around fix and flip would be going in to buy a really awful property, putting in the money to completely renovate it so that it's a beautiful home and then selling it for an increased value, right? The value of that home is extremely high. You can do contract assignment. So you don't even have to purchase a property. You can actually purchase the right to purchase a property and then sell that right to somebody else and assign the contract to somebody that does have the cash and is willing to pay. So it's a little bit different, but that's also a possibility. There's a lot of details involved in that, but it's possible. A lot of the homes that are sold that are undervalued or are hideous, right? Nobody wants to buy them if you're just looking to buy a home, are foreclosures and short sales. Generally speaking, these are homes that have been neglected for quite a while and they're in really bad shape, bad condition. And if the bank owns it, they want to get it off they don't want to own homes, okay? They want it off of their books, off of their inventory. And so they put them in auction and you can go and buy in. Again, usually cash offers win. If you have to go get approved for a loan to buy a foreclosure, it's not going to work. They want to get it off. And so if you have cash, then you can win at the auctions. Short sales are similar. It's somebody under serious duress that needs to sell before they get foreclosed on, a process to go through a short sale. But these are properties that are selling at a discount. And so just like you, everybody has this idea, people with money, investors, and they want a piece of that. But you can go in, buy them, rehab them, and put them on the market. And then wholesaling essentially is instead of selling property to somebody that might want to live in it, what you do is you go rehab it and then you sell it to an investor who wants a buy and hold real estate property, okay? And so you might work out special deals there, a discount if they can come in because they might be able to come in with all cash and things like that. So there are people that fix and flip and then sell to the general public. There are people that fix and flip to then sell wholesale to an investor who is going to buy and hold and get renters in there, and that's part of their strategy, okay? So on the last note on this video, you can tell there's a lot of moving pieces. And so in real estate, generally speaking, there are very strong networks. There's a lot of real estate investment clubs, and there are a lot of people that are experts in all these different areas and financing and finding the homes, finding the deals, wholesaling investment properties. And so if you create a good network of people in this space, it's a lot about your connections, who you know, and then you can, collaborate, partner, and find great people. If you are a wholesaler, then you can find investors that are going to consistently buy your properties. If you're an investor, you can find a wholesaler that's fixing and flipping, you like their work, and you want to buy the properties that they rehab, right? There's people that go out and find properties that are undervalued, and you can go get that from them. So good network is super important. These are a few of the real estate strategies, but I just want you to understand what you're getting into. We'll talk about truly passive real estate cash flow in the next video. All right, see you guys then.
Real assets, real growth, real freedom. That's what real estate can offer.